All right, well, good afternoon and welcome. It's Jill Sparks with the Small Business Center, and Dwayne Adams and Daphne Carson are here representing our Small Business Center team as well. And we are pleased to be able to partner with Justin Agins and Eric Spengler with Spengler and Agins, a business and employment law firm out of Charlotte, to help you navigate the many questions that arise on a daily basis regarding all of the different options and obligations that your company has during this pandemic. So this is part of a new initiative that the Small Business Center at AB Tech is involved with called Startup Asheville. And so that site is now live, startupavl.com, and you can go there, and that's another resource for our clients in our community. So a few housekeeping items. We're going to wait until the end of the presentation for Q&A. If you could please mute your mics, that would be great. Many folks mute their video as well. And we prefer if you use chat for questions, and we will make sure that your questions and comments will be observed and answered and go from there. So I will turn it over to you, Justin. Thank you.
All right, well, thank you very much, Jill. I'm gonna go ahead and share my screen. Oh, it looks like I am not able to share my screen. I think I might need to be promoted to a panelist.
Okay.
We'll get right to it in a minute.
Is it working now?
Well, I can give our background. Yeah, I can give our background while we're getting into that.
Okay.
Yeah. So I'm Justin Agins. My partner Eric Spengler and I are a small firm that works with startups and small businesses on everything from formation work to key contracts, commercial lease work, and early stage funding. And in the last couple of weeks, of course, with the recent COVID-19 legislation, that includes relief measures and additional obligations for small businesses, we focused on helping small business owners navigate, what seems to be a fairly complex and confusing set of new opportunities and directives. And so, what we are focusing on is helping you understand each of the component parts of the legislation, as well as how they interact together. In some cases, taking advantage of one program forecloses the opportunity to take advantage of another. And so from that perspective, we are, going to make sure that we do our best to answer whatever questions we can related to, how those programs interact, so that you can feel confident as you work towards applying for the various programs that are available. Let's see. I'm still not able to share.
Let's see, Eric. Justin, I'm looking right now.
There it is. It's coming up.
Okay, good. Thank you.
Is that coming through for everybody?
Yeah, and then, okay. Yeah, great. Thanks.
Awesome. So component parts at a high level, I'm going to cover point one, which is really a bunch of subparts, but it's primarily going to be on the economic relief options that are available through the Paycheck Protection Program, EIDL grant, and kind of highlight some other options that are available. At that point, I'll hand it over to Eric, who's going to cover tax credits and FMLA, mortgage and rent relief options that are available for commercial real estate and landlord-tenant types of issues, and then expanded unemployment. From there, we'll go ahead and just kind of run down your questions in the order that they come in. And, feel free to ask the questions along the way, and we'll provide whatever color we can. I'm going to hop right into it. So the program that's gotten the most press is the Paycheck Protection Program. And the reason why is that while it's intended to be a loan, it's also intended to be a forgivable loan, functionally free money in the event that you use it for permissible purposes. So, the short version of what that means is payroll, rent, and utilities. So those are the core ones. To the extent that you have needs that are outside of those core uses, there are other options available that you can pair with the Paycheck Protection Program, but specifically for this program, payroll, rent, and utilities are going to be the items for which it's properly used. So one question is, well, how do you calculate the amount of the loan that you're able to receive? And functionally, it's going to be 2.5 times your monthly payroll, with payroll being a term that's specifically defined. So it's going to be, W-2 wages. If you're self-employed, the self-employment, the amount you pay self-employment tax on. And it specifically does not include what you pay 1099 contractors. Now, some people have wondered why that's the case, and without going into the detail right now, functionally, folks who are 1099 contractors are going to be able to apply in their individual capacity for relief, and so that's kind of the why it's not included at the employer level. As part of this application, you're going to have to make a number of certifications. The first one is functionally just that the current economic uncertainty from COVID-19 makes the loan necessary for you. Almost every business I've talked to can truthfully say that without any problem, but there are kind of a number of other ones, the other big, their intended purposes. Another piece is, how do you apply and where do you apply? So your local bank, and specifically the bank with which you have your existing business checking account, is going to be where you want to start. The SBA, which is working with banks to administer this, has given instructions to their local banks to focus on their existing customer base. So if you go and try to establish a new relationship, unfortunately, that means you're going to be at the back of the line. So focus on your local bank and do that ASAP. While these loans are intended to be available through June 30th, they're already starting to run out. So there was $349 billion that was allocated towards this in the CARES Act. Unconfirmed reports yesterday talked about over 200 billion of that already having been allocated as of yesterday. So it's moving very, very quickly. While there are talks that have bipartisan support for 250 billion more, we strongly suspect that follow-on legislation is going to be more difficult to pass than the initial legislation that's already been passed in response to COVID-19. So make sure that you, if you haven't already called your bank, if you haven't already gotten their application, that you're doing that as soon as possible, like when we finish this call. Basic terms for the amount of this that are not forgiven are 2 years at 1% interest with a 6-month deferral before it starts. It's such a short term because they intend for most of this to be forgivable if you use it for its intended purposes. One other pretty amazing benefit is that there's no personal guarantee required, and you don't have to provide collateral as well. So jumping into, well, how do you make sure that the loan that you get actually gets forgiven? So a little bit more detail on that. If you use it for payroll, which includes the healthcare and retirement benefits piece, rent or mortgage interest in the event that you own your building, and utilities, you're in good shape. There are a couple other items. For instance, if you had debt that was incurred before February 15th, interest payments on that could also be forgivable. The key time component of this is you have an 8-week period after the loan is dispersed, so when it hits your checking account, to use it such that it will be forgiven. So if you were to get it on May 1st, you functionally have until about the end of June to use that money for it to qualify for forgiveness. So now, in what ways could that forgiveness amount be reduced? There are a few. So the majority of the loan is intended to be used for payroll. So to the extent that you use more than 25% of the loan you receive towards non-payroll items, then there could be a reduction in the forgiveness amount. So a scenario where this might come into play is if you have relatively low W-2 payroll costs, but high rent in proportion, you may be inclined to use more of the forgiveness money or the paycheck protection money for rent than the 25% that's allowable for it to be forgiven, in which case there would be a reduction in the amount that's forgiven when it comes time for that. The other two ways in which that reduction amount can be forgiven is in the event that you reduce the number of employees that you have, or decrease salaries or hourly wages by more than 25%. Now, given how crazy the current economy is and the uncertainty regarding when stay-at-home orders and similar social distancing recommendations and requirements are in effect, there's been a little bit of an understanding, which is not usual, but in the event basically that you get back to where you were historically by June 30th, then you're fine, and it's not going to result in your forgiveness amount being reduced. So you've got this functional safe harbor period where there may have been a reduction in terms of number of employees or salaries or wage numbers. As long as you get that back to where it was by June 30th, then the forgiveness amount will not be reduced for those reasons. So quick summary, apply quickly. And even if you're not able to get in touch with your banker or they say they'll give you a call in a day or two, go ahead and start preparing documentation now. Think typical financials that you typically provide when you're going for a loan. So, if you can have your federal tax returns ready. The piece of documentation that we saw that was something that not everybody had readily accessible are quarterly tax reports. They're forms 940 and 941 with the IRS. So to the extent that you can get in touch with your CPA and let them know that you're going to be applying for the Paycheck Protection Program, and have them go ahead and send over your quarterly tax reports, you'll have done some of the prep work that'll be necessary as you get ready to apply. Again, let me reiterate, use your existing bank relationship for a few reasons. One, the SBA is telling banks to prioritize folks with whom they already have an existing relationship, primarily as a fraud prevention tool. But the other thing is that if you work with the bank that you already use, they already know you, and which means they're willing to work with you. You may have an existing relationship where it's easy for you to get them follow-up materials if it's necessary. And the like, do your best on the details, but perfection is not required. Now, the next bullet says document, document, document. And the reason why that's there is because there's going to be kind of two components to this. There's the application for the Paycheck Protection Program loan. But once that period is completed, you're also going to have to submit supporting documentation for that loan amount to be forgiven. And so to the extent that you are documenting everything along the way, that should help you make that forgiveness application as painless as it can be. And last but not least, I would say be kind. Your bankers are experiencing workloads that are on the order of 10 to 20 times more than they are used to. And as a result, it's going to be high stress and long hours for those folks, and a little kindness will go a long way. One, for just human to human interaction, but also for, making sure that they take good care of you, because not everybody's going to be kind, and that little bit of kindness can go a long way towards making sure that you get access to the program. Switching gears to the next available program that has been highly publicized. It's called an Economic Injury Disaster Loan. And you may have seen reports out there for a $10,000 grant that the government is providing to folks who just successfully complete an application. It was supposed to be 3 days, when you'll see I have that in the air quotes, because I still, even though that opened up on March 30th, I still haven't gotten confirmation from anybody that they've actually received that grant check or that grant amount in their bank account. Nonetheless, I think for many businesses it will be worth applying. by way of background, injury disaster loans have been around for a long time, but they typically have been used in scenarios like hurricanes or tornadoes. So typically natural disasters. This is the first time it has applied to a pandemic. Now, the impact on you for that is that right now the SBA is doing its best, but it is ill-equipped to be handling the amount of volume from small businesses across the country. And that has resulted in multiple site crashes and a lack of clarity, I think, regarding how this process is going to work. Now, a little bit about the loan itself. So you're going to apply for this online, and I've provided the link there. Although if you just type in the EIDL application, you can find that simply by just using your browser. But functionally, these are intended to provide loans that are up to $2 million, and they can be used for a wide variety of intended funding or uses. So it can also be used for payroll or accounts payable or increased costs due to supply chain issues, other debts that need to be serviced, etc. That said, if you're going to use an EIDL loan for payroll and rent and utilities, then you can't also use the Paycheck Protection Program. Now, you can combine both loans, but the EIDL money that you would get would need to be used for purposes other than what's intended for the Paycheck Protection Program. So quick reminder on that. That's the payroll, rent, mortgage interest, and utilities. So you'd have to have other things that you would be using these funds for. Some examples of that might also be paying your 1099 contractor, since that's not included underneath the Paycheck Protection Program. These are pretty favorable loan terms as well, but they look a little bit more like what you'd see in a traditional funding setting. So right now, the basic terms are 3.75% interest up to a 30-year term and at least a 6-month deferral. Those are kind of pretty standard. It may be a little bit better than standard that you'd find in similar situations. These loans should be available until the end of 2020. And we'll just have to see what it looks like in terms of government funding for this. The last figure I'd seen was $10 billion that was being made available for this, which in comparison to the $349 billion that is under the Paycheck Protection Program is obviously a much smaller amount. Some other details on this: no personal guarantees for loans up to $200,000. That's extraordinary, although we are in extraordinary times, and so that's certainly merited. SBA can approve this solely based on credit score without requiring tax returns. I think that's an acknowledgement of the fact that, one, not everybody has completed their 2019 tax returns, but also the fact that the SBA should be incentivized to move quickly to fund businesses that need that money yesterday, not in 3 to 4 weeks. Again, SBA is not typically in the business of loaning directly to small businesses. And this is the disaster of all disasters, as one of our financing partners in the Charlotte community shared with us. And so it is, they're doing the best they can and are trying to staff up and figure out how to implement this system, but it is still a learning scenario for them right now. They had said 2 to 3 weeks best case for processing and disbursement. I think we can probably add a week or two onto each of those and be in a more realistic time frame there. This next one is merely an example of another loan option that is available. There are a number of smaller funds that are popping up in, at the regional or county or state level. This particular one is available at the state level. A fund, a small business development company that actually helped us get a loan to buy our building, turned us on to this NC Rapid Recovery loan. It had been funded with $15 million, and which is obviously a small amount, but they're providing up to $50,000 loans. It's a shorter term, 4-year, 5.5% interest, but the speed is what's really pretty amazing about this. Is it'll take they intend for about a week or less for the loan applications to be processed. We've provided contact information there for Bevcor, which is the partner that we used previously. when we got our loan for the building that we bought, but you know, they're running out of money for that initial 15 million, although it is they're looking for additional funding sources in order to increase that amount that's available for them to help small businesses. The benefit to these regional or state-based programs is that they're available only to businesses and residents in North Carolina, which means that the competition pool is obviously much smaller, even though the total funds available are smaller as well. I think many small businesses are going to need to explore a combination of potential relief. And so this would be an example of a smaller fund that's available, but that could provide some really beneficial relief in the short term here. Last up for what I'll be covering is a quick summary of other relief. So in the event that you don't qualify for the Paycheck Protection Program, or if unfortunately you the funds ran out before you were able to get approved for it, there are a couple of relief options that are available that have already been passed with various COVID legislation. So those two are the payroll tax deferment. So any payroll tax that was accrued in 2020 would not be due in this calendar year. Half of it would be due by the end of 2021, the other half by the end of 2022. So that deferral could certainly help with cash flow issues over the next couple of years. The second option is an employee retention tax credit of up to $5,000 tax credit per employee, based on a $10,000 salary piece of things. In order to qualify for this employee retention tax credit, you have to have been partially or fully ordered to shut down, or alternatively experienced a 50% revenue decline year over year. So if you look at, you know, where you're at now versus where you were at the same time in 2019, which I think is going to be an easy standard for many of us to meet. That employee retention tax credit applies in different ways depending on how large of a company you are. If you're over 100, which is very few of us, it only applies to the people that you pay who are that you're paying but that aren't actually working, so they're idle. If you're less than 100 employees, which is the vast majority of us, it applies to all payroll. So not perfect solutions, but there are benefits out there that apply to a number of situations, and you know, we're happy to help clarify specific questions, but at this point I'm going to turn it over to Eric. Eric, go ahead and unmute yourself and I'll kick it over to you.
All right. Thanks, Justin. So my name's Eric Spangler. I am the litigation partner in our firm, and that means that I am in court dealing with employment and business disputes. Justin talked about the financial relief that's available to you through various loans and grants. I'm going to cover basically all the other things you need to consider at this time in terms of your finances, starting with the paid leave that's in the Families First Coronavirus Relief Act. So this act took effect on April 1st, and it's the first time in American history that the government is requiring employers to provide paid leave for employees, at least at the federal level. There's no law in North Carolina that requires paid leave, so for purposes of North Carolina employers, this is the first time they've had to deal with this sort of thing. At its core, the paid leave is a marriage between requiring the leave be paid for by employers on the one hand and refundable tax credits from the government on the other. So in other words, the government will make your payroll for the folks who need to be on leave during this time. The law applies to all employers who have fewer than 500 employees, which is a bit unusual because if any of you are familiar with the Family Medical Leave Act, which has been in effect since the early 1990s, that applies only to large employers. So folks who have, or employers that have more than 50 employees. That FMLA law does not require the leave to be paid, however. And so again, this is the first time that there's a paid leave requirement. There's basically two types of paid leave. One is if your employee or your employee's family is sick with COVID-19, in short. And the other type of leave is if one of your employees needs to take care of children who are out of school because they're closed due to COVID-19. So the sick leave is a 2-week paid leave provision, and then the childcare leave is a total of 12 weeks. In terms of the tax credits, you're able to take a deduction against your payroll tax obligations for the amount that you pay employees under this program. And if the amount that you pay the employees exceeds your payroll tax, then the government will refund any amounts above that to you on a quarterly basis. The amounts are subject to caps, which we'll talk about here in a second. And again, it's refundable. So it's the government putting money in your bank account on a quarterly basis. So let's get into some of the details of this. The 2-week requirement for sick leave, that applies if you have an employee who's experiencing COVID-19 symptoms and seeking a diagnosis. They don't have to have received a positive test. As you all know, there are very few tests out there, and it's not required that an employee get a confirmation they have COVID-19. It's only required that they experience symptoms and are seeking a diagnosis. Your employees are also entitled to sick leave if they're subject to a quarantine order, either from a medical provider or the government, or if they're caring for somebody else who has symptoms or is subject to an order. And for these folks, they're entitled to their full paycheck. So whatever their regular pay is, they're entitled to that for the 2 weeks. And it gets kind of complicated on how you calculate that. And you'll probably want to seek some advice on how to calculate the rate of pay, especially if you have hourly employees, for instance. If this becomes an issue for you, there's a cap up to $511 per day. Anybody who's making more than that in salary is doing really well if you do some math. So you don't have to pay more than $511 per day to these folks. The exception there is for, see the blue asterisk, anybody who's caring for a family member, they get 2/3 of the regular pay, not their full paycheck. The 12 weeks of paid leave applies to any employee who has school-age children. It actually applies to employees who have adult children with disabilities as well. But if the employee is needed to stay home to take care of their son or daughter who can't go to their typical child care facility, or they cannot go to school because they're closed due to COVID-19, then your employee is entitled to paid leave. So this could apply to a lot of folks right now. And schools in North Carolina are closed through at least May 15th. So there's a lot of people that this could cover. The other requirement is there has to be work for that person to perform. So if you furloughed employees or laid off folks, they don't get paid leave now. They're furloughed for the time being. And it has to be the case that the employee cannot perform the work remotely as well. So what else do you need to know about the new paid leave? Well, like I said before, it takes effect April 1st, so it's in effect now. There's a possible exemption if you're an employer with less than 50 employees, which I'm sure is most everyone on the call here. There are 3 different ways you can possibly seek an exemption. The first is if by providing paid leave, you'll basically have to shut down your business because you'll no longer be able to bring in enough revenue to cover even your expenses from operating at a minimal capacity. Also, if any of your employees have special knowledge, maybe they're the only one in your office who knows something about your business, you can maybe seek an exemption on that point. Or if there are simply not enough people to perform the work, if you allow for the paid leave, that's the third option. But before you try to exert one of those exemptions, you'll want to talk to a lawyer and make sure that it applies to your company. Importantly, you're required to give notice to your employees of their rights under this new paid leave program. And so there's a 1-page flyer that the Department of Labor has put out that you can share with your employees and satisfy this requirement. We've got some written materials that we can share with folks after the webinar, and that's included there. But after today's webinar, you'll want to make sure you provide that written notice to your employees so you're in compliance with the law. Again, it probably applies to quite a few employees. There's a government order to stay at home for non-essential business workers through April 30th at last check. And then again, schools are closed until May 15th. So this could apply to a lot of folks. For people who are teleworking or are able to telework and are taking care of their kids, there's an opportunity for what's called intermittent leave, which is basically, it means they're not taking every single day off, but they might work, a couple days each week, or might work in the mornings on certain days and take leave in the afternoon. Typically, that's not something that works for the FMLA leave, but under this program, the government will cover the amount of time that they're not able to work. So if they're taking the afternoons off to take care of children, and maybe their spouse is taking care of the kids in the morning, you could get a tax credit for that afternoon time. As with the other programs that Justin talked about, you'll definitely want to document, and there are specific things you need to document for folks who are taking advantage of this leave policy. It depends on which type of leave they're taking, if it's a sick leave or to take care of children. And then lastly, on the back end, when the employee is ready to come back from leave, so maybe you have an employee who takes several weeks off to take care of a son or daughter, well, they're entitled to have their job back, when they're ready to come back to work. There are some exemptions or exceptions to that rule for employers with less than 50 employees. And if you run into that situation, again, you'll want to seek specific legal advice. All right, how about your rent or your mortgage payments? One of the things you're going to want to do right now, if you haven't already, is kind of shed some of the costs or delay costs as much as you can. And so we have been talking with various folks in the financial industry, and basically understand that most large banks are willing to give a forbearance of 3 to 6 months right now. If you have a mortgage, for instance, on a building. The key is to ask for a forbearance and reference specifically COVID-19. If you just call into a call center and say, I'm having financial difficulty right now, my business is having trouble making rent payments or a mortgage payment, they might not open the doors to give you the relief. There's some reports out there that you have to say COVID-19 to kind of trigger the gates to open. Again, as Justin discussed earlier, your rent and your mortgage interest payments are forgivable expenses under the payroll or the Paycheck Protection Program. So if you're able to get a PPP loan, you can basically have your rent paid for through the government if you successfully receive one of those loans. Also, if any of you happen to have an SBA 504 loan, the government's basically going to step in and pay a good chunk of your mortgage for the next 6 months, starting in this month in April, and that takes place automatically. So you don't need to contact any mortgage company. It's just you're gonna see that auto draw from your bank account is not gonna come for the next 6 months. BevCorp, one of the groups that Justin mentioned earlier, is one of the organizations that helps businesses purchase real property, and they use these SBA 504 loans. If you've got one, you'll know you have one, but hopefully I'm providing some good news to folks today and letting them know that the government's going to cover their mortgage. Also, if you have a commercial lease, so if you're renting and you don't own your building, which is probably most of you, you'll want to talk to your landlord and get in writing an amendment to your lease agreement that allows for you to delay your payments. This point kind of varies based on the terms of your lease, and so you may need to seek legal advice to have someone look at what is in your specific lease agreement. But there are a couple provisions that often come up. One is called force majeure, which is, as lawyers, we always use fancy Latin words. It just means superior force. So in certain circumstances, your lease agreement might address what happens if some crazy thing happens, like a pandemic. Do you have to keep paying your rent during that time? And then also, in very rare instances, you might be able to get out of a lease altogether based on a doctrine called frustration of purpose. Again, in our written materials, we'll share with you an article that I wrote for North Carolina Lawyers Weekly magazine that talks about how those two doctrines work. And of course, you should seek specific legal advice if you think that might apply to you. And lastly, unemployment. This is a really difficult topic for most small business owners. A lot of us have had to lay off workers because there's no other choice right now. The first point I want to communicate to all of you is that you're not alone if you've had to lay off workers. This chart here shows the number of new claims of unemployment benefits dating back to the 1960s. The third week in March was 5 times the prior record. That's that $3.3 million bar on the far right there. And then the fourth week in March was over 6 million. And so that was 10 times the prior weekly average or weekly record going back, 50 plus years. And I just heard the most recent numbers from this past week, and they're over 6 million again. So, you shouldn't feel bad about laying off workers. A lot of us have no choice, and there's certainly a lot of employers out there who are having to do this. There's a few things you want to keep in mind, though, when you're thinking about laying off workers or furloughing workers. Most importantly, I think, is you want to give your workers the best chance possible that they have to get unemployment insurance benefits. The system in North Carolina, as many of you probably know, is really difficult to navigate. It's severely understaffed now. They're seeing, I've heard 100 times their normal claims on a weekly basis. And even in good times, the unemployment system is not very generous in North Carolina. Only about 10% of workers who apply historically get granted unemployment, and the benefits they receive are not that generous. It's about $300 or $400 per week, and only for a period of a month and a half or so. There's new legislation now with the CARES Act that is broadening who gets unemployment. So in the past, if you were furloughed or had your hours reduced, you were not eligible for unemployment benefits in North Carolina. That's supposed to change now. Also, if you were self-employed in the past, you were not eligible for unemployment insurance benefits, in part because you don't pay into the insurance system. But now that's supposed to change. And I say supposed to because there have been no indication really that North Carolina has adopted the changes. People are being denied still in ways that they shouldn't be. And so you may need to appeal a denial if you have an employee or if you personally are self-employed and have been denied. The real benefits to applying for unemployment right now is that the federal government's stepping in and providing an injection of more money into the system. So in North Carolina, you might expect to get $300 or $400 a week if you normally apply for unemployment. Well, the federal government's coming in and pitching in another $600 per week. So it's unemployment on steroids during the COVID crisis. Couple final points here. If you're laying off employees because of the COVID-19 crisis, which I think for 99% of folks who are laying off employees right now, that's the cause, you will not be charged an increased rate for your unemployment insurance. So typically, if you're a company that has a lot of unemployment claims filed against it, you'll see your unemployment insurance rates go up. And so, the companies that are laying off a lot of workers are the ones who pay more for unemployment. But for COVID-19 claims, they're suspending that rule. And if you have to lay off workers, you're not going to see an increase in your unemployment insurance. However, again, it's key that you document these things. And so both for purposes of making sure that your unemployment insurance rates don't go up and to make sure that your employees have the best chance of getting unemployment insurance benefits, you're going to want to provide something in writing to your employees when you're laying them off, if you have to do that, in the unfortunate case you have to do that, and make sure that you reference COVID-19 and what impact that's had on your business in that notice so that it works out the best for both your employee and your company. And then lastly, I think we have one final slide. We're providing this information to you today for informational purposes. This is the classic lawyer disclaimer. If any of you have specific legal questions, we advise you to seek a lawyer to give you advice that's specific to your situation. With that said, we're happy to take some questions. It looks like we have a few already. But if you want to, in the Q&A option down below, send us in your questions. We will try to give general answers to your questions so that they are not necessarily specific to any individual company or person, but we do advise that you seek specific legal advice if you have a situation that requires it. So Justin, I'll let you take it from here.
Awesome. Yeah, so I'll handle the ones that covered my section from before and then kick it back over to Eric as appropriate. First question, regarding the Paycheck Protection Program, can you clarify how it works for businesses with no payroll, but that pays self-employment tax? So for that piece of things, the way the legislation is intended to operate is if you're paying self-employment tax, that'll be viewed kind of the same way as if you're paying payroll tax. So depending on how your business is structured, you will be able to qualify for the Paycheck Protection Program if you're paying self-employment tax. I will say that we've had some folks who reach out and they pay themselves little or no wages and take all of their money out as profit distributions. If you're taking money out as profit distributions, so you're not paying the self-employment tax, or you know you're getting to that profit side of things rather than paying self-employment tax, you won't be able to count the profit piece of things towards the loan that you're going to get through the Paycheck Protection Program. A related question was, how does having ownership in other businesses impact eligibility? And the short answer is we have no indication that you can't apply or that your ownership is impacted or your eligibility is impacted by owning pieces of other businesses, but each individual business will have to apply. So just because you own multiple businesses doesn't mean you can just do a single application that applies to everything. Instead, the loans are going to be given at the entity level. So if you've got 3 businesses, that'll be 3 applications that you have to put in.
And Justin, if I could jump in there, the only thing that matters is if you have affiliate businesses. So, you know, maybe the same owners own more than one company. That matters for purposes of calculating whether you're a quote unquote small business. So you have, if you recall, Justin, I don't know if it was in the PowerPoint, but to qualify for the Paycheck Protection Program, you can't have more than 500 employees. Let's say you have one company that has 300 employees, another company that has 400, and they're both owned by the same people. That could get you in a situation where together you have more than 500. This won't apply probably to anybody on this call, but that's what, if you read anything in the news about, you know, similar owners for various companies, that's what they're looking at there.
Okay. Next question regarding EIDL, does the 10K grant require the larger loan application approval? No, it does not. So the 10K grant, or it's really up to 10K, so we don't know what those figures are going to look like, is granted upon successful completion of the application, not approval of the application. And Eric, I'm going to kick the next question to you. I'll go ahead and read it. It is, does COVID-19 leave apply to both salaried and hourly employees?
Yes, it does. By comparison, the Family Medical Leave Act that's been in place since the 90s, that has much tighter restrictions on who is eligible for unpaid leave. It's really just you're allowed to take leave and have your job back. Under the FMLA, you have to have worked a certain number of hours in the last year. I think it's 1,250 hours. So you have to basically be almost a full-time employee in the last year before you want to take the leave. Under the new emergency paid leave that we're talking about, there is no requirement like that. For the paid leave, you could have started work for the company yesterday and you're eligible for the paid leave immediately. That makes a little bit of sense because if you have COVID-19, we want you to stay home and not infect your coworkers, regardless of how long you've worked for the company. And for folks who are looking to take leave to take care of their children, so that 12-week option, the only requirement is they must have been an employee for the last 30 days before they take leave. So if somebody just started with you, if you're one of the rare companies who's hiring right now, it's only your employees who've been with you for at least a month who get the leave for childcare purposes. But beyond that, it applies both to salary and hourly workers. And in terms of how you calculate what people are owed for their pay, it's a little bit trickier for hourly employees than it is for salaried employees. And so you'll probably want to talk to a CPA or a lawyer about how to calculate that if you have that situation.
And we do have some questions from the chat room. First of all, what line on the tax return would you find the self-employment tax?
I'll take a stab at this one, although please keep in mind I do not have tax returns memorized, nor do I have a photographic memory. For sole proprietors, I believe that you report your income on what's called a Schedule C. On that Schedule C in Part 1, there will be basically what was your total income through the business, what were your cost of goods sold, and then I want to say it's line 4 in that Part 1, or line 5. It's line 5, I think. It should say like a gross profit number, and that's the number on which you pay self-employment tax. Now, this is being done completely from memory, so please don't quote me on that, but that Part 1 section should have that information. And if you're reporting your income on a Schedule C, that's the number on which you pay your self-employment tax. So you would take that number and divide it by 12 in order to get, what the first box on the Paycheck Protection Program application would require of you. And then you multiply that number by 2.5 to get the loan amount. All that said, I just wanted to provide the information I had. Your banker will literally walk you through that, and they will also help you check your math and make sure that everything's proper, because they're going to be verifying what you provide in terms of what they're calling supporting documentation. And so take your best crack at it, and your banker will make sure that it's correct as part of finalizing the application.
The other thing there, if I could jump in, so Justin's talking about Schedule C. There's also a Schedule K or a K1. The amount that you report on your K1 is money you cannot claim. That's where the profit distributions go for certain entities. So Schedule C is probably what you're going to see for your self-employment income, which does count. The K1s do not count.
Okay, great.
Double check with your tax advisor, please. We deal with this a lot as lawyers who have to work closely with CPAs, but that's not our specific area of expertise. So caveat.
Well, and I have another question too. When someone does receive PPP funds, are you advising them that they open a separate checking account for that, or some type of separate account, so that it makes it easier for them to provide documentation for possible forgiveness?
No.
Okay.
They can if they feel like, I guess if the existing account is complicated enough, that could make sense in specific rare circumstances. But I think for most folks, that's probably adding a step that's unnecessary. But it's kind of up to the way that you manage money yourself. But most folks we're talking to are not opening separate checking accounts for what that's worth.
Okay. And I have another question too. If someone receives the PPP and they have an employee that they've retained, and that employee has to quit or something under regular circumstances, can they then hire someone else and still use those PPP? It would be for position rather than person. Is that correct?
Correct. So they're looking at total number of employees, and then, the wages or salary of those folks. It is not that you have to have the specific person with their social security number that you're paying that was historically paid in order to be properly using those funds such that they'd be subject to forgiveness. So it's the number of folks and then the respective salaries there. It's not the specific people.
Okay. Those are a few questions that we receive at the Small Business Center. And as we're going through these questions, can our panelists think of additional commonly asked questions that they've heard a lot of from clients, people in the community, other questions maybe, and so forth?
Yeah, I think, one of the big ones that we've gotten that there's been confusion around is, can you apply for both the Paycheck Protection Program and the EIDL? And how do those two interact with one another? So at a high level, we're encouraging folks to definitely apply for the Paycheck Protection Program. In terms of the EIDL, if you apply for that and you receive the grant, that money is going to be, functionally refinanced into the Paycheck Protection Program. So you can, in fact, get both, but it's going to be lumped into the Paycheck Protection Program. You cannot use those funds for the same purposes if you get both and they stand alone. So specifically, if you get the EIDL grant, you can think of other uses that might be separate from payroll, rent, and utilities. So I mentioned just briefly during the first part of the presentation that you can pay 1099 contractors there. If you have outstanding accounts payable, that's permissible use. If you're a restaurant or other food and beverage that has perishable items and you had, spoilage or loss there, you could use the EIDL grant in order to buy new inventory, for instance, to get up and running once, the economy opens back up and we return to whatever the new normal is. So you can do both. You just can't double dip in terms of usage. For folks who, that's when you get actually both of them approved. For folks who get the Paycheck Protection Program approval and then they receive the grant for the EIDL, but the larger application for EIDL is not approved, that's where the EIDL grant money will be basically refinanced under the Paycheck Protection Program. And it goes into that short-term loan, the 2 years, 1% interest with a 6-month deferral. So I went through that pretty quickly, but the short answer is yes, you can do both. You just shouldn't use the funds for the same types of expenses. We actually got another question, and it was specifically on what she said, what do you mean by the 8 weeks period after getting the Paycheck Protection loan? And is it beneficial to pay utilities or mortgage interest ahead of the norm to use the loan and earn forgiveness? I see. Okay. So you got 8 weeks from the time that the money hits your bank account for that money to be eligible for forgiveness. That's the first part. The second part of the question is it beneficial to pay utilities or mortgage interest ahead of the norm in order to use up the loan and earn forgiveness? So let's say you get $10,000 from the Paycheck Protection Program. I think an example will help here. Remember, 75% or more of that has to be used for payroll in order for the full amount to be forgiven. So that means you'd have $2,500 to allocate towards rent, mortgage interest, or utilities. And so I know you can pay for past due items. I don't know that you can more aggressively pay in the forward-looking scenario. I would confirm that with the banker who's going to be administering the application, grant, and forgiveness piece of things. I suspect that more aggressive payments are not what was intended under the bill, but I don't actually know the specific answer to that question. Eric, do you happen to know that?
I don't know if that's permissible. I think the more common scenario, if anybody's ahead on rent anytime in the next few months, congratulations, because that's a good spot to be in right now. I think the more common scenario is probably you're going to be falling behind on rent. And so if you can't make your April rent or your May rent and you talk to your landlord and are able to negotiate a forbearance, then maybe you get the PPP loan in June or July and you can get current on your rent, hopefully. And those past due expenses would count up to that cap. So in the example you're talking about, Justin, if only $2,500 in rent would count. If you owe $4,000 in rent, you can't count $1,500 of that in this example towards the forgiven amount. And the $7,500 that has to go to payroll in this example, remember that includes not just wages that anybody receives, but if they have any employer provided benefits like health insurance or retirement benefits, that kind of thing, that counts as well.
Yeah, let me see if we've got any other new. I think we've gotten to the, I think one more just came in. Okay. So if you're a self-employed individual, you'd effectively need to spend 75% on payroll But if you're the only employee, is it worth attempting for the program and forgiveness more generally? So the short answer to that question is the amount of the loan that you're going to receive is going to be based historically on what you've paid yourself if you're the only employee of the company. And so if you would want the government to basically pay you your historical self-employed salary for 2 months and have that forgiven, then absolutely you should apply for it. A more nuanced question here, to give a little bit of color to it. So I have, I've got a family who they're hairdressers out in Colorado, and a few of them own a hair shop together. And for one of the people that owns the shop, based on the way that they've historically done their paid themselves partially, using W-2 employee, and so they pay self-employment, or they pay payroll tax on that, and then part of it's done as a distribution, so the K-1 side of things. Only what you pay yourself that you pay payroll tax on, or self-employment tax, is eligible for this Paycheck Protection Program money. And so they did some back of the napkin math, and they realized they were actually better off staying on unemployment for as long as they're in a government ordered shutdown as a non-essential business than they are applying for the Paycheck Protection Program. So there can be situations where it may not make sense to apply because it would foreclose other potential relief options. But assuming that that you're making more than you would pull in on unemployment, I think all else equal, it would certainly make sense to apply for the Paycheck Protection Program, because at a minimum you're getting your salary covered, based on historical numbers.
Yeah, and one more thought there. It's not required that you spend 100% of the money you receive from the loan on forgivable expenses. Maybe there's a situation where your rent is not high enough that you can, maximize that 25% piece that has to, it's possible that maybe you can't get all the money forgiven. In that case, it doesn't mean that, all that means is you have to repay the amounts that aren't forgiven at 1% interest over 2 years. So in theory, you could keep that money in a bank account and, it's not spent on anything. And then when the government says, okay, we're forgiving X dollars, but you still owe us Y, you could just return the Y. You don't have to, you can't take the money and with the intent of using it for expenses that aren't covered. But in the end, if it doesn't work out for you 100%, the penalty is that you get either a 1% loan, a loan with 1% interest, or you just give the money back.
All right, let's see.
Are there any other questions? Okay, well, Justin and Eric, thank you so much for providing much clarity regarding these very confusing programs oftentimes, and helping us help our clients navigate this crisis. This has been recorded, and folks can go to startupavl.com to see this again and refer to this very important information. So thank you very much.
Sure. Thank you, Jill. And thanks for everybody else, Dwayne, and anybody else that was involved in putting this together. Hope it was helpful, and good luck to everybody as we do our best during these challenging times.
Thank you. Thank you very much.